Hi friends, good afternoon. Today I'll be talking about what the global situation remains quite uncertain and volatile, and India is still the silver or the gold spot compared to the overall situation. But having said that, there are still challenges which are there, which an investor has to face while investing. So, what really should the investor do? Number one is stop reading, interpreting too many data points because it all gets confusing beyond a point of time. Number two, which I think I keep saying, is that law of averages. So the law of averages that things tend to revert around the mean has been seen for past so many years and centuries. Of course, there's no guarantee for future. So rather than focusing on news that this is going up, this is going down, if you have a longer goal of investment horizon, chances of reverting to that mean return greatly improve. So again, the future still remains uncertain, but that is what a lot of history has taught us. So number one, cut the overall crap in terms of excessive news flow. Number three is align. Number two is basically align your goals, and investment should be according to those goals, small term, medium term, long term, depending upon the horizon. Plan in investments according to that overall objective. Number three is that of late, there have been various indicators which investors cannot ignore. Number one is the huge rise in the price of gold and silver in the last 1 year. Various parameters like bond yields globally, various things like prices of various commodities. So there is all these are trying to show that there is some amount of uncertainty, something is not adding up. So coming to the overall picture in the US space, there's a lot of debt that they have. Then there is tariff which is being imposed, which is ultimately going to hurt their own consumers. So what really is that there is a lot of things which are not very clear. Of course, there's some positives like India has tried to work on with the EU and with the US on the trade deals and other thing. So, and a lot of work is there in progress. So, good things are happening. So, we need to also look at the overall picture. But at the same time, the investor needs to understand that his objective is to make a decent risk adjusted return. Now, there are various type of investors. The aggressive ones obviously would be looking more towards equity, which may be fair in their bit. But for the moderate and conservative customers, the products which are more suitable or available in the markets, I'm saying they may be looking at, they can look at things like balance advantage funds as a category, or they can look at something like, multi-asset as a category. So why these categories are also catching up is that, of course, one needs to do due diligence as per investors' risk profile, but these categories have better chances of giving you risk adjusted returns simply because they diversify the investments into equity, debt, alternate, things like gold, silver, real estate. What will do better at one point of time may be something very difficult to take a call. And the other thing which I have heard recently is that people are trying to predict levels. Where will gold go, silver go, where will this go? How does it really matter in the large scheme of things? If you are a customer with a longer investment horizon and you understand that gradually things will revert around mean. Look at Nifty, for example. The last CAGR for 20 years is roughly about 12-13%. Now, I'm not saying that we get that CAGR in future. Neither I'm trying to make any prediction, but I'm trying to tell you if you're a long-term investor, the odds of getting a CAGR close to the mean improve. So the point I'm trying to say is that remain invested, align with your goals, and kind of diversify into various asset buckets so that you can get a better risk adjusted experience. Look at various categories. This is just for example I've given. There could be many more categories which you can look at again as per your risk profile. If you're a more debt type customer, you can go to debt based products. More equity type customer, you can go to more equity based products. Another new category has come for the very aggressive customers called SIF, specialized investment funds. AIFs are there again, very high risk. The caveat is people will end up losing a lot of money if you don't understand. So be very careful in these categories. But I'm just sharing, there's so many things which are available. So align with your goals and remain invested and cut the overall news flow and lines because you'll only get more confused in the bargain. So that is my take. And now the disclaimer, this is not any kind of advice. This is something which I felt I just wanted to share with you. Kindly consult your own experts for taking any financial decisions. I will not be responsible for any loss on account of contents in this video. Take care. Have a good day. Bye.